Do you ever wonder how you can save for life with just $1,000 in your pocket? Picture this, you've got $1,000 in hand and you're looking to make it grow. You're not looking for quick cash or a get-rich-quick scheme, but a solid, reliable method to secure your future. You're in the right place, my friend. Welcome to the world of investing. Investing is all about making your money work for you. It's about choosing the right vehicles that can take your hard-earned money and help it multiply over time. It's not just about saving, it's about growing wealth. It's about creating a safety net for yourself, for your retirement, for life. And that's what we're all about here at Smart About Money. We're here to guide you through this journey to help you navigate the world of investing. So, why wait? So, let's dive into the world of investments and understand the best options available to you. Starting off with Vanguard Index Funds, a popular choice for many investors. So, what exactly are Vanguard Index Funds? Essentially, they're a type of mutual fund with a portfolio constructed to match or track the components of a market index. What makes them attractive is their broad market exposure, low operating expenses, and low portfolio turnover. Now you might be wondering, why should you choose Vanguard Index Funds? Well, there are several reasons. Firstly, these funds offer diversification. This means that your money is spread across a wide array of stocks or bonds, reducing the risk of losing your investment. If one company in the fund performs poorly, it's likely offset by another that's doing well. Secondly, Vanguard Index Funds are known for their low costs. This is because they are passively managed, meaning they aim to replicate the performance of a market index rather than trying to outperform it. This strategy results in lower transaction costs and management fees. So, how can you start investing in Vanguard Index Funds with $1,000? It's quite simple. First, you'll need to open a brokerage account. Vanguard makes this process easy with their online platform. Once your account is set up, you can use your $1,000 to purchase shares in a Vanguard Index Fund. There are several funds to choose from, each offering exposure to different segments of the market. Some popular choices include the Vanguard Total Stock Market Index Fund and the Vanguard 500 Index Fund. Remember, investing is a long-term game. The goal is not to make a quick buck, but to build wealth over time. Vanguard Index Funds, with their diversification and low costs, are a great tool for achieving this goal. With Vanguard Index Funds, you're essentially buying a small piece of the entire market. This allows you to benefit from the overall growth of the market, while minimizing the risks associated with investing in individual stocks. It's like having your own little slice of the global economy. Scene script. Next up, let's explore the exciting world of individual stocks. Individual stocks represent ownership in a specific company. When you buy a share, you're essentially buying a piece of that company with the hope that the value will increase over time. Investing in individual stocks can yield high returns, making them an attractive option for many investors. Now, here's the catch. The volatility of individual stocks can be high, meaning they can fluctuate in value quite rapidly. This can lead to substantial gains but also significant losses. You see, unlike index funds, which spread your investment across a broad market, individual stocks can be a bit of a roller coaster ride. One day you might be up, the next day you might be down. This is why it's crucial to understand the risks involved with investing in individual stocks. It's not for the faint-hearted and certainly not a place to park your money if you're not prepared to potentially lose some of it. But don't let this deter you. With careful research and a good understanding of the market, you can make informed decisions about which stocks to invest in. Consider the company's financial health, its competitive position in the market, and its future growth prospects. Look at the company's earnings reports, read news articles, and listen to what the experts are saying. Keep in mind, though, that even the most well-researched investments can still go south. The market is unpredictable and influenced by a myriad of factors beyond any individual's control. That's why it's important to diversify your portfolio and not put all your eggs in one basket. Investing in individual stocks requires patience. It's not about making a quick buck, but about long-term growth. You need to ride out the market's ups and downs and hold on to your investment for the long haul. Remember, investing in individual stocks requires patience and a good understanding of the market, but the potential returns can be rewarding. So if you're up for the challenge and equipped with the right knowledge, the world of individual stocks could be your next big investment frontier. Now, let's talk about the digital gold of this era, Bitcoin cryptocurrency. Born in the shadow of the 2008 financial crisis, Bitcoin is a digital currency that operates independently of a central bank. It's like the Wild West of the financial world, where freedom meets uncertainty. Think of Bitcoin as a digital ledger, a blockchain, where all transactions are recorded. When you own Bitcoin, what you actually own is a private digital key that you can use to write entries into this ledger. This key is your proof of ownership. But here's the catch. Bitcoin is limited. There will only ever be 21 million Bitcoins in existence. This scarcity is what gives Bitcoin its value, much like gold or diamonds. Now let's talk about risks and rewards. Bitcoin is volatile. Its value can swing dramatically in a short span of time. It's not unusual for the price of Bitcoin to fluctuate by 10, 20, even 30% in a single day. This volatility can be a double-edged sword. On one hand, you could make a fortune if the price goes up. On the other hand, you could lose your investment if the price goes down. But don't let the volatility scare you away. If you're game for some risk and have a long-term perspective, Bitcoin could be a rewarding investment. Remember, you don't need to buy a whole Bitcoin. You can buy a fraction of a Bitcoin with your $1,000. Investing in Bitcoin is like riding a roller coaster. It can be exhilarating, terrifying, and everything in between. But it's also an opportunity to be part of a financial revolution. Bitcoin has been the best performing asset of the last decade, outperforming stocks, bonds, and gold. So, how do you invest? You start by setting up a digital wallet, then you purchase Bitcoin through a cryptocurrency exchange. Always remember to keep your digital keys safe. Investing in Bitcoin can be a roller coaster ride, but it's an exciting investment option that has seen significant growth in the past decade. Finally, let's turn our attention to real estate investment trusts and gold. Real estate investment trusts, more commonly known as REITs, offer a fantastic way to get involved in the real estate market without needing to buy property outright. These trusts work by pooling together money from multiple investors to buy, manage, and sell real estate properties. This means you can start investing with as little as $1,000 and still enjoy the benefits of property ownership. REITs are typically split into two types: equity REITs and mortgage REITs. Equity REITs invest in and own properties, and their revenues mainly come from their properties' rents. Mortgage REITs, on the other hand, invest in and own property mortgages. They make money from the interest earned on these mortgages. So whether you want to invest in physical properties or in mortgages, REITs offer you the flexibility to do so. Now, let's switch gears and talk about gold. Gold has been a symbol of wealth and stability for thousands of years. It's a unique asset because it's not tied to the performance of the stock market. This means when the stock market is in turmoil, gold prices often go up, providing a safe haven for investors. While gold doesn't offer a regular income like stocks or REITs, it acts as a store of value and a hedge against inflation. Investing in gold can be as simple as buying gold coins or bars, or even investing in a gold ETF. A gold ETF is a type of fund that tracks the price of gold. It allows you to indirectly own gold without having to physically store it. In conclusion, both REITs and gold offer unique benefits and can be a great addition to your investment portfolio. While REITs allow you to invest in real estate without the need for a large amount of capital, gold provides a sense of security in unstable times. So, we've covered a lot today, haven't we? We've delved into the world of saving for life, explored the benefits of Vanguard Index Funds, and navigated the complex terrain of individual stocks. We've plunged into the exciting realm of Bitcoin cryptocurrency and discovered the opportunities in real estate investment trusts and gold. These are just a few of the many avenues for investing your hard-earned money. Remember, investing isn't a get-rich-quick scheme. It's about Step into the realm of financial finesse with Smart About Money Channel, your go-to hub for wealth planning insights, money management tips, and more. Dive into our wealth of videos, old and new, for a treasure trove of knowledge. Got a burning question or a topic you're curious about? Drop a comment, we're here to guide you. So, what are you waiting for? Subscribe now, and let's make your money work smarter, not harder.